Hello and welcome to our second episode and another of On Your Side. We're going to do a follow-up today, going a little deeper on no-fault insurance and the costs and how some things have been said but aren't really happening and how is it impacting you.
Sure.
So I'm going to start. I'm the host. I'm Nick Bour with Inspire Wealth, and I have James Bejin from J. Bejin Associates.
Hello.
And I have Kevin Green from Bashore and Green.
Hey.
So we are all here and looking forward to talking again about this, guys. I think this is a really important topic. I think there's a lot of people that you ask, especially if they have family or friends in other states, you're getting the, James, you probably hear this all the time. Why is Michigan so expensive for auto insurance? It's just outrageous.
I hear a lot of that.
So let's talk a little bit about, premiums are going up, renewals are going up. We talked a little bit last time, Kevin, how your renewal went up when your renewal came. So,
speaking of that, so last time I said that it went up like 40% or 50%.
Right.
I actually talked to my agent. I was a little bit off.
Okay.
It went up. Didn't go up that much.
Okay. All right.
It didn't go.
But it still went up.
Oh, it still went up, contrary to what we were promised back when this no-fault reform.
Yeah.
For 8 years, we were supposed to get a reduction.
Yeah, and that's still. Are we still waiting for that? Because I know I am.
Yeah, well, we're going to talk about that today and kind of articulate the reasons why. This is good information for the consumers, and really it's just about educating you guys about why we're paying the cost we're paying and some of the headlines behind that. So,
and I want to take a minute and also say, not everyone may connect the dots or fully understand why the three of us decided to do this together.
Sure.
And one of the things is definitely, James, with your company doing the insurance, on a daily basis that you do, obviously from your perspective, Kevin, you see the after effects of accidents, injuries, lawsuits. What are the costs? How does that impact all of that? And then obviously, I'm really looking at the financial impact and liability insurance and your PIP laws and why you need to have, the right liability limits and also the right PIP limits, because not everyone understands all the ins and outs of how that works. So,
Sure.
James, I'm going to kick it to you first, and kind of say, from what we were originally promised, when we voted in 2019 to kind of, want reform and expect reform, we know inflation has kind of kicked into gear the last year and a half. So, I know we're going to, obviously, if we haven't already, we're going to hear, well, it's inflation. That's why rates are going up.
Right.
Help us understand what's really going on there.
Well, I think it's easy to understand once you are articulate it in the way of it was kind of the perfect storm, right? So, obviously when COVID hit, that added to the reason why we're in an inflationary period right now, because we had to inject some money in the economy, and here we are.
Yep.
Again, no fault was an attempt, or this reform was an attempt to reduce costs. And really what they did was a midnight session where they said, well, let's reduce the PIP costs of the policies. What they didn't account for is where we're at now is not only are we seeing the inflationary, premium increases, but we're also seeing the change from, let's be honest, you can't even buy a brand new car. Half the lots are empty. The chip shortages, so now there's shortages in parts to fix the cars.
Yeah.
The cars are sitting on lots to be repaired over time, so that all adds to the bottom line. In 2019 when they did this reform, it was really intended to decrease that PIP coverage, but really what the auto insurance carriers are doing now is finding other ways to make up for that. Kevin made a good point, earlier before we started the show. He said, well, I went up 10%, and at the same time, my PIP coverage, as far as the cost, might have went down a little bit with the PIP reform, but my collision coverage went up, and all the other ancillary areas went up in cost to make up for any reduction that the PIP was there for. So, I think, in the end, they talk about the insurance carriers were making record profits during COVID. Drivers weren't really driving,
Right.
And we're not really seeing those savings at all. In fact, we're up about 7 to 11%, and that's only going to, increase. We talked about, Michigan's what we call a file and use state, okay? So anytime a carrier wants to increase premiums, they have to come up with a good answer why to the Department of Financial Services of Michigan. They call it DIFs.
Yep.
And they've been approving them right and left. And really, at the end of the day, it's like we're seeing more increases now than ever. And it's definitely, we can attribute that to a little bit about the Ann Dairy ruling, and we can go into that a little bit, in the latter part of the show. But the bottom line is, yeah, we're spending more. The file and use that I'm seeing by carrier, we're looking at 11 to 15% increase across the board. That's just not my carriers. That's all the carriers.
Yeah.
So I think it's only going to get worse.
What's the justification of that?
I think, well, what they're saying is, the MCCA shortcoming, which again will articulate why we don't believe the math is really what it is.
Right.
They're saying the Ann Dairy ruling, right? So they're going back. The Ann Dairy ruling was basically an injured client named Ellen Ann Dairy back in, I think it was 2018, before the no fault. She was injured. And there was some court rulings about keeping her unlimited medical before the cuts that they made in the reform. They found it unconstitutional. So if you think one person's going to go after that, obviously we know the rest of them are going to go after that. And the MCCA is saying we're short because of that, not the refund checks.
Yeah.
We're short there because of that. And, to add to that real quick, this MCCA refund that we received, the $400, well, at the end of the day, the actuaries, the ones that said, well, I think we could do $400 each, that's responsible, we'll have plenty of money in that fund. Well, they're short $2 billion. And you and I and everyone were talking about that and said, well, wait a minute, you guys are actuaries. It's like, how did we, and now they're blaming it on the Ann Dairy ruling, saying all this money's coming out of there. And they literally went.
So they're speculating that they're going to run out of money at some point in the future.
Right.
They're going to run out of 22 or $23 billion at some point in the future. So because we think this may happen at some point, let's increase it right now.
And the other thing is, there's an argument out there with diffs. There's some speculation out there with the Department of Financial Services. A lot of critics are saying, you guys are so easy to, when a carrier does the file and use and wants a premium, increase across the board, you guys are just easy, let's do it, right? So, it's there needs to be some accountability, and everyone's kind of passing the buck. And what you're finding now ultimately is you might see a little reduction in your PIP costs, but they're making up for it in the other areas of the policy, which they're not required to adhere to. Meaning, when it was written, it said we need to reduce the PIP coverages and the premiums associated with PIP. Well, the carriers went around that and said, okay, fine, we'll just increase the cost with collision and comprehensive and all the other things.
So, and I want to take a minute from a financial standpoint, especially on the inflation side, because we all know we're starting to hear that's the excuses that the insurance companies are saying. Well, inflation, that's the reason why the rates are going up. And from a consumer standpoint, which is the whole reason we're doing this, is to educate the consumers and make sure they're making well-informed decisions. Well, okay, if you are a retiree, even though you're on a fixed income, you might have assets that you can take to kind of supplement if this cost goes up, depending on how much your premium goes up. The problem is for the active workers still.
Right.
We all know our incomes aren't going up, 10% or 15%. So the concern that we were talking about earlier is where
do you cut?
What is the first thing that the average consumer is going to think of cutting? And it's always liability.
Yeah.
Because that is one of the things that they think, oh, well, that's a major driving factor. Well, James, you've said it even to me a million times, and I know it because I see it in my own policy. The cost difference on an auto policy between like a 100, 300 liability limits to a 250, 500 is what?
$40-$50 a year.
Like nothing.
And it's good that we're talking about this because, look, at the end of the day, we're all looking to save money any way we can,
Of course.
In this economy and market and whatever you want to call it. But, what's key is to not cut certain things that in the long run could really, what are you cutting? Meaning it could cost you way more in the end. So, what I tell clients currently is if you want to reduce something, for example, increase your collision deductible to $1,000, but make it broad form. And then the next question is, what's broad form? We know what that is, but some consumers don't. If you're not at fault or not deemed at fault, the deductible is waived. So to keep a higher deductible, the cost goes down, and if you're a relatively safe driver, then it's a good benefit to you. The other thing is comprehensive. I sometimes tell clients to move it to 500 or 750, but with a low glass deductible. So if you need a windshield, it's still a low price.
You will need a windshield here in Michigan at some
Yes,
point.
you
Yes, we all know that. We all
But
know
what
that.
you don't want to cut, you made a good point. Some retirees that are on fixed incomes that are retired and may have assets, well, opting out, still not the best choice, but they're not susceptible to income loss, right?
Right.
Where, Kevin's working, he's probably got 20 more years, working in his field or longer. But, if he got hurt, his income he's not working, right? So
I'll take it one step further, though. In your scenario where the retiree decides to lower their policy limits
Right.
or lower their PIP coverage with the retiree that has the assets. So what happens, here's the reality from my standpoint.
Mm-hmm.
If that retiree is at fault and hits somebody else and that somebody else sues them, insurance will only cover so much.
Yep.
So let's say it's only $50,000 or let's say it is $100,000 if they qualify per the no-fault reform.
right.
Now, their personal assets are at stake. So whereas before, the insurance coverage was plentiful, and so you hurt somebody, you get sued, you hand it over to your insurance company, they defend you, they cover any kind of injuries, any kind of liability limits. Now, that retiree is now at stake at losing their home potentially, their car potentially, their retirement. That's still iffy. I don't think you can go after someone's retirements per se.
Protected, right?
But
other assets that are non-IRA assets.
non-IRA assets, yeah. So someone who has, let's say the average person retired, 68 years old, saved up $50,000, and they're living off Social Security for the rest of it.
Sure.
Well, that $50,000 in their bank account is now at risk.
Yeah.
They decided to keep their Chevy Equinox, but they wanted to, like a lot of retirees that I know, want to buy that dream car of theirs.
Sure.
So they go buy some restored Corvette or restored Mustang or restored whatever.
Mm-hmm.
That is now at risk.
Yeah.
Sure.
So you can't, to save 40, 50, $60 a year, let alone a month, it is not worth it.
No, and it's interesting that you're bringing this up because I this is me personally, James, and I don't want to get James too excited by going down this road, but I'm going to open Pandora's box here, and I'm going to say, part of the problem is, and James and I can definitely relate to this, is that the consumers, it's almost like the insurance industry and the financial industry is like they're trying to commoditize us, and like, we don't bring value because we're not planning. It's all price driven.
Sure.
And that's, it's ridiculous because a perfect example of this is I had a potential client come from a workshop that I hosted that was an engineer at one of the big three. And I will tell you, he had let's just say 7-figure, not just one 7-figure, retirement assets and just different investable assets. He didn't even know what an umbrella was. What
Umbrella policy.
Yeah.
Sure.
What is so I'm just saying this from perspective because obviously someone who's numbers driven, we all know engineers tend to be numbers driven, and doesn't even know what the benefit or value an umbrella policy could be. And I want to go one step further because I'm bringing this up as an example. We've all seen the new TV ads.
Sure.
You know where I'm going with this, with Cure.
Yeah.
And everyone's like, oh, do you know your insurance agent gets paid if your premium is more, they make more money. Okay, wait a second, people. Part of the responsibility of the insurance agent, just as well as my role as a financial planner, is to plan, is to look at how much do you have in assets? How much in liability? I would recommend how much you should have in PIP limits because of your assets. And that's, I think, from a perspective of the consumer, I think that's why education is so important, because if they understood the difference between a 100, 300 and a 250, 500 liability policy is 40, 50 bucks a year, I'm going to say that most people that actually have reasonable amounts of assets are going to say, well, that's a no-brainer. I'll pay the 40, 50 bucks a year.
Of course.
My concern is, and I'm sure you share the same one, is you got companies like Cure, and I'm not throwing them under the bus, I'm just using them as an example, that they're commoditizing and price driving people to shop based on price and not based on asking the right questions. And that's going to go back to impacting the legal side when you get sued or when you get hurt, whether it's in an accident or someone slips and falls on your property or any of those things. If people are adjusting liability limits because that's what they think is driving the price, and they want the cheapest price because companies like Cure are saying it's price driven.
15 minutes can save you 15% or more.
Yeah, and we got Geico as well. I mean, we have all these companies, and I think it's so important for every consumer, whether you're talking to your financial professional, your insurance professional, or you're seeking legal counsel because you were in an accident and you're looking to what should I do?
Well,
what is the best thing to do? I'm looking at it from the perspective of a consumer taking the educational approach, just because that's what I feel like I do every day is educate. I feel like there's a lack of education and knowledge for consumers when it comes to this stuff. They just don't know.
They need, you're absolutely correct. They have to figure stuff out. And how do they figure stuff out? They go to the experts. They go to the financial planners. They go to the insurance brokers. They could even go to lawyers. I mean, I'll tell you from my standpoint, you brought up umbrella policy. Everybody should have an umbrella policy, especially if you have kids. Why? Because your 16, 17-year-old kid is not the best driver if we play the statistics, right? Their reaction time isn't the best. Their tendency to be distracted, their ability to figure out the next move of the other car is just not there like an experienced driver. So what happens when, like, for instance, I have a few teenage drivers in my house.
Me too. Well, not yet, but close.
And they're just not there yet, especially when they approach a blinking yellow turn light. They don't understand the concept. You still got to wait for oncoming traffic, who has the green, to go. And so, let's say they get in a car accident. I'm just picking on any teenager. The parent is going to get sued. The kid will get sued because he or she is driving. But the kid has no assets at risk. It's all the parents.
Correct.
And so what the umbrella policy does, and I don't want to steal your thunder, it covers you. So let's say you take out that $250 policy, because currently liability limits in Michigan, the minimum is $250 unless you qualify for something smaller. But the umbrella policy covers you for $1 million, $2 million, as high as you want to take it out. And so let's say you injure somebody, you're no longer just covered under that $250. Now, if I know I got a 1.25, the $250 plus $1 million or $2 million or $3 million, whatever it is, I feel more comfortable that my personal assets, my home, my car, my bank account, it's not going to be at risk.
Because you do this, let's be honest, for a living.
This is what we do.
And what's one of the first things, and this isn't to scare consumers, but it's just to be transparent, Kevin, what's one of the first things you look at when you're looking? Like, you look at the potential person's limits, right?
I look at the deck page.
You look at the deck page, and the deck page shows you how well they are or are not insured, right?
If you get hit by a commercial vehicle, the odds are it's going to be a very high policy. Commercial vehicles are required to carry that. You get hit by a 1985 Corolla, my guess it's probably going to be the smaller limits.
Right.
But hopefully that person has an umbrella policy, because otherwise, with no insurance or little insurance, you may be out of luck.
Well, and this is good to bring up because we were talking about this before. One of the most important coverages, and I know Kevin will agree and so will Nick, is probably the most inexpensive, or one of the most inexpensive parts of your policy. It's the underinsured and uninsured. I had a client.
Well, explain what that is.
I will. So we had a client that I wrote a commercial auto policy as a big landscaping company, $1 million limits, $1 million UIM. Bottom line is another person hit him. He was in the commercial vehicle. It was well insured. The other person that injured him pretty badly had no car insurance. So the policy I wrote for him actually covered him, the driver. I mean, what do we pay insurance for? Even though we're in no-fault state, it's like you want to cover yourself, right? So he ended up getting quite a settlement and all of his medical costs covered because the policy was written correctly, and that coverage is super inexpensive.
You know what I think we should talk about is when you have your auto insurance policy, your own. Many people think, well, you know what? Because I got hit by the other driver, I could sue him or her
Right.
for all my medical bills and all my wage loss.
It's your own.
It's
your
not
own.
how it works.
No.
You actually go after your own insurance
Correct.
policy.
Correct.
So when you
Hence
take
no fault.
when you take out an insurance policy, you try to take out the best in case you get hurt.
Yep.
So that you're covered for your wages that you're not able to work for, your medical bills, so your doctors can now treat you and get paid. If they're not getting paid, they're not going to treat you.
Right.
So, going back to this UIM and UM, explain what that covers if you are in a car accident with someone who doesn't have the insurance.
Well, right, and really, what it is, it's like Kevin said, it's to protect you. It's a benefit for you. So if that person is either underinsured, maybe they've got like state minimum limits, or they don't have car insurance. And let's be honest with you, there's statistics out there that say, 15-20% of actual drivers don't have it.
Yep.
So that coverage is intended to cover you. If you're injured or you're hurt, the underinsured or uninsured portion of your policy actually kicks in and covers those expenses for you. And guys, we're talking about probably $8 to $10 a month,
Right.
not even.
Yeah.
Right. And some people decline some of those coverages.
I know.
I'm like, guys, it's
James,
stupid.
You know this as well as I do. I mean, part of what I do when I'm doing financial plans for clients, I always ask for their home and auto insurance deck pages.
Yes.
And I always get the, why do you
Yeah, why do you need that?
why do you need that? Why
Right.
do you want
It's
that?
none of your
in it?
business. Right.
And it's always the same answer. Because we're talking about financial planning, I need to review and make sure you have proper liability limits based on your assets. Oh, and by the way, if you're very happy with your agent, that's totally fine. If you're not and you do want to review coverage, I do have an independent professional that knows what they're doing that can review it.
I know a guy.
Yeah, I know a guy.
I'll take it even one step further. We just learned last couple of weeks. Not only should you think about UIM and UM because it's like you said, it's minimal amount of cost.
Right.
Gap coverage.
Cap's huge, yeah.
So gap coverage.
Gap,
So what I thought when you take a car loan out, I thought every bank will offer you, hey, do you want gap coverage? And I just found out maybe
not
2-3 weeks ago, if it's an older car, meaning older than, I'm going to make it up because I can't remember, but older than 2016 or 2017.
You asked me about it. Like
Yeah.
not long ago, yeah.
They will not give, the bank will not give you gap coverage.
Right.
So you go to your insurance carrier to get the gap coverage.
Right.
And that's how much is it? Maybe
Yeah,
$5 a
it's
month?
Not a ton of money, right?
And so what that covers, where most people don't understand, you get banged up, your car gets banged up, you still owe $20,000 on the loan. The appraiser is saying, wait, it's only worth $15,000. You still owe $5,000.
That's right.
Yep.
That gap
Will cover
coverage
it.
will cover it, so you
How
no
about-
longer have to pay
How
for
about
it.
this one? And this is one you always run
And I
into
did. I
something.
learned that from you this
Yep.
2 weeks ago.
Yep.
Yeah.
I had a younger gentleman sign up with us, and it was a lease. And most of us don't put a ton of cash down on a lease, right? Usually a couple grand at most, because we don't own the car. Why would we throw $5-6?
Save it in your bank account.
Right.
Yep.
But in his case, he really wanted the payment to be where it was. Well, he actually threw a significant portion of money down on the lease. And who would think to offer gap, right? It's a lease. And in a lease, typically gap insurance is built into the lease. And it is.
Yeah.
But guess what it doesn't cover? If you pop $5,000 down,
You don't
Right.
get that $5,000 back.
you don't get the $5,000 back. So, you learn and you see these scenarios that play out sometimes that you don't think about. But he got burned pretty good on that.
And I'm
you know?
guessing going back to now financial asset planning, I'm sure a financial planner would say, wait a second, why would you want to spend $5,000 down so that your payment could be, let's say, $700 a month instead of $850 a month?
Right.
You take that $5,000, you invest it or keep it in your own bank account because you know that extra $150 that you are worried you may not be able to make, it's sitting in a bank account if you need to make it.
Well, it's funny you mentioned that too, as far as like earning interest, common interest. When this $400 refund check came, to agents it was a complete nightmare, and I'll
sure.
tell you why. Because the larger your book is, so to speak, the more you have to deal with clients not getting it in time or not knowing what to expect, when to get it, right?
Yeah.
So when that rolled out, it was very, very inundated with phone calls and where's my check? And the reality is we didn't control that from day one. We never did. The carriers control it, but they had a window of time. They had to like May 1st, right? And to issue the checks, right? So a lot of clients would call and be like, well, wait a minute, where's my check? And I'm like, guys, if the MCCA fund is giving the carrier $200 million, rest assured you're not getting it until the very last day.
Correct.
And even then, sometimes they weren't even, we had to call, but it was a little bit of a nightmare. And, we didn't see any real savings. We know that.
We know that. Yeah. So let's talk, because I kind of want to make sure we cover another topic before we start wrapping up.
Sure.
So, again, I kind of said in the beginning, James, you probably get all the time, oh, why is Michigan so expensive? And so two things. One, where do you see insurance costs going in the future? Number one. And number two, where do we rank as far as cost against other states?
So that's a good question. I'll answer both. So where do I see insurance going? Unfortunately, like everything else in life right now, up. Again, talking about the file and use with the carriers, just about everyone across the board, guys, expect between 11 and 15% automatically, whatever carrier you're with. And again, going back to what coverages could you cost or cut to offset that, I would not mess with your liability limits. I would not mess with the unlimited PIP portion. I would look to increase deductibles on your comp and, comprehensive, sorry.
Okay.
Maybe you can cut the rental car out. A lot of people don't know this, but with rental coverage, typically if you have a collision, and it's significant, the cost to fix is significant, a lot of repair shops will give you a free loaner because they want your business.
That's
so
true.
there's certain things you can cut, but
a good
you don't.
point.
It is, yeah.
It is. That is a good point.
And that's certain areas you don't want to cut. Stay away from liability. Stay away from PIP.
I think the other thing that not everyone knows, though, you brought it up a few minutes ago, and not everyone knows this, that your comp deductible, that you can separate your glass deductible.
That's right.
Because everyone gets scared, like, okay, Kevin, you joked about, we all know we're going to get window chips. I mean, I'm driving
Michigan, right.
with one in my car right now. My wife's got one and a new little small one, and we're both kind of like, yeah, we're not replacing our windshields right now because I don't want the comp claim right now.
Right.
And-
And Nick, I educated you on this, and Kevin, I don't know if you knew this or not. I think we touched on it, but so as silly as this sounds, when you make multiple windshield claims, I say multiple. Let's say your policy term is 12 months, and you're good for 3 windshields that year. You're going to pay more at renewal.
Yeah.
And they surcharge for that. Here's the other thing that to me can be a little ridiculous, and most carriers are starting to do this now, is your roadside, right? So my recommendation as an agent is to get an outside roadside program. AAA's got a great one.
I was going to say, I've
right?
got AAA, so.
And the reason I say that, let's just say you have a car that isn't running so well, and you've got multiple tow claims, let's say 3, 4, 5 in a policy term. You will be surcharged. I'm telling you right now. And it sounds silly because we're talking $60 a whack, right? But I'm telling you, I see it all the time, and it's not a good thing. So keep in mind, you might want to get roadside outside of your carrier. And as far as where I see this all going, I see it all going, unfortunately, up. There are ways to cut, like we just mentioned. I don't have a crystal ball to tell you where we're going to end up, but I will tell you that shop around, guys. It's just almost like a cable bill. I hate to say it. Every couple years you get the great rate, and sometimes it can increase. And so with that said,
James, it's more than that, though. As I've already said, you need to make sure, you've got an independent agent, and I'm not trying to throw aside the State Farms and the Allstates and the farmers guys that can only write those companies. I'm strictly saying consumers need to do their due diligence and their research by working with multiple brokers or a broker that can quote multiple companies.
That's right.
And they need to be able to have some trust and faith in that agent that they're going to recommend what's best for you. And then if they come back and say, here's the cost, and you as the consumer say, that's a little higher, is there anything we can do? Now we're going to educate you on what you should be thinking or not. Kevin, here's something for you to kind of close out. We look at how cost is going up on the insurance. We all know if consumers are not educated on this, they're going to lower limits. They're going to lower liability limits, or they're going to lower PIP limits. how is that going to impact from the legal side? I'll say over the next 5 to 10 years.
Oh, if you lower your limits and you're involved in a car accident, either you're going to get sued by your doctors because they're not getting paid by the insurance company, you're going to get sued by the other driver that you hit, or that they hit you, even though they're going to say, you know what, it was your fault. There's going to be way more lawsuits, which in my opinion, eventually, because these costs are so high, there's going to be way more bankruptcies, way more foreclosures, because you can't afford to pay any of these costs.
Right.
It's impossible.
Right. So this is very, obviously hearing this as a consumer, it can be a little scary. And I want everyone to know that is listening or watching,
Mm-hmm.
look, we're doing this not only to educate, but we're also doing this because we care. Like, we want to help people. So we want everyone to know that, you know what, if you have concerns or you have questions, reach out to
give us
your
a call.
current financial professional, or reach out to us. Reach out to James or your current insurance agent. If you want to run a question by and you don't have an attorney or legal counsel that you trust, that's what we're here for, so that you are educated and you can make well-informed decisions.
Right.
Because
Knowledge is power.
knowledge is power.
And you want to hear something interesting too? And I always get a little chuckle, but I actually, always want to do the right thing. But you know how many friends that have called me knowing that I'm in insurance, and they're not clients and they haven't been clients, but they have, oh shoot, I got water in the basement, James. I know I'm not with you, but can you help me?
Can you help me?
And the answer is yes.
Of course.
You don't have to be a client, guys.
Right.
Listen, would I like you to be a client? Sure. But at the end of the day, feel free to call me, bounce anything off me. I'm happy to answer any questions you have. So.
And I agree. I'm the same way, even on the financial side. Anyone that just wants me to take a second look or ask a question, whatever, that's what I'm here for, and I always want to help. And Kevin, I know you feel the same way. So
We take tons of phone calls every single day, every single week from people that are not our clients.
Yeah.
And why? We're happy to help.
Sure.
I mean, truly, it's all about, like you said, education and just helping the next person along. That's it.
So, and I think that's where we'll close this episode. So, again, I'm the host, Nick Bour. I'm with Inspire Wealth. We're in Brighton, and we're a full-service financial planning firm. Any help or any questions you have, please don't hesitate to reach out and ask those questions. James, J. Bejin and Associates here in Waterford.
Yes, here in Waterford. Waterford's finest over here. And no, actually, this great community, guys. I'm happy to answer any questions that you guys have, concerns. I'm on Dixie Highway. You can hit our website, look us up. But yeah, happy to help. We're a full-service agency brokerage. So any questions, concerns?
You're not going to be able to say Dixie Highway much longer.
I know, we're moving. We're pretty excited about that, though. But yeah, we're moving on up. And thank you, Waterford, and all friends and family for always supporting us. So appreciate it.
Kevin, and Kevin, Bashore Green, you guys are in Pontiac, and you guys have been there for quite a while, right?
We've been in Pontiac now for almost 7 years now, right there in downtown Pontiac.
Yep.
We're
Dude, you're right by like the hot spot, like right near Tonic, and where Tonic
we
used
are
to be.
we are in the heart of what used to be the party zone
Yes.
of Pontiac,
Of
and that we
Pontiac.
all used to party at.
Yeah.
I
And-
just told my wife FIFA,
Yeah.
the World Cup was in Pontiac, Michigan in 1994, the
Yeah.
year I graduated.
Okay, that is crazy to think about that.
That's true.
That it was in Pontiac.
And
Yeah.
Pontiac was jumping.
Back
Jumping.
then-
You know, it's coming back.
It
It's
is.
coming
It
back.
is.
That's why we moved to Pontiac to help out. Anyone wants to come by, stop by. We're in the heart of downtown Pontiac, right on Saginaw Street. Love to say hi, have a cup of coffee with you, and answer some questions if you have any.
That sounds good. And again, I'll just kind of say, as far as me, one of the big ways that you can get info from the Inspire Wealth side, just check out our website, inspireyourretirement.com. And we have a bunch of good information videos, no pressure, just get good info. So I want to thank everyone for the time to listen, and our audience that's growing. And we look forward to doing On Your Side episodes over time,
Yeah.
and also going into different topics and deeper
Yes,
into other
yes.
topics.
We can only talk about car insurance for so long. We were going to have some guests, right?
Yes.
And we'll figure out how to reach out to you. But yeah, looking forward to.
You got to
having
stay
some
tuned
guests.
because every week we're gonna have something different, someone indifferent, some
For
different
sure.
topic.
Yep. This
You
is
know?
like
some make it heated.
our second run. We're trying to perfect it here. So we're looking forward to you guys